Hey, what is going on? Welcome back to the channel. Today we're going to be taking a look at the NEAR token. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, it's going to be linked in the top right hand corner of the video. Check that out before watching this one. Now, looking at the Fib retracement that we have set up over here, I set it up a long time ago and I gave you this $20.40. Well, here it says $20.20, but the actual 1.618 level is $20.41. And that is basically your target after you break this swing high here at the first level. The people who have been watching me for quite a while know that after you break the first fib level here, you're targeting the 1.618, and that's exactly where we got rejected. So as you can see, this is where we were trading at the last time I made a video. I think it was December 28th, something like that. So let me just give you the amount, the percentage over here. So 56%, we were up 56% since the last video, and I gave you some support levels. Those levels were not met, but if you were holding from before and you bought your tokens here, you bought your tokens here, you bought your tokens on this December dip, then if you bought these tokens on the December dip, guys, you're up 220%. So you had the 1.618 targets, guys, and you could have potentially taken profits if you were looking to take profits, if you were looking to swing trade. As you can see, you met that knob on, and now you're pulling back down for support. A good support level would be the weekly 20 EMA. That's a great support in my mind. If you start losing that, I would look for some other fib levels, but we're not going to take a look at that scenario just yet because NEAR is very bullish. I don't think we're going to be breaking the trend anytime soon. As you can see, we are in a perfect uptrend, higher highs, higher lows. There is a bearish pattern playing out right now, but for that to play out, we're going to have to lose some support levels. And the first support level here is this white trend line. As you can see, we have broken above it, and now we're potentially looking for a back test of support. So draw this white trend line out like this and wait until you get down to it. Set some buy orders at around about $10.90. Well, I would say $11 roughly. And that can be potentially your buy order. Now, you have the 1.272 over here at $11.74. The price tags are a bit hard to match with the exact fib level, but you get the idea. Now, the 1.414 level over here, which is our next support that we're potentially going to land on, is $14.73. So that's your support level, but I think we're going to lose it and we're going to come back down a little more because as you can see on the weekly chart, ignore the trend lines. They are for the daily chart. We have been overbought here on the weekly. We entered the overbought zone here, and that was your little signal that you can potentially start taking profits. And if you did, good for you. Now you can potentially buy back in at the 1.414 level if you sold at the 1.618. So that's a 28% discount. And if you're going to buy in at the 1.272, that's a 42% discount, which is great in my opinion. Great swing trade. So yeah, congratulations to all of those who took profits on this level if you were looking to take profits. If you're holding for the long term, good for you. You know, no need to stress about the prices in the short to midterm. Now, yeah, that's it for the weekly. Let's jump into the daily. Okay, so jumping into the daily chart, you can see that we have a couple of resistance levels here on the daily chart. So one resistance level is over here. As you can see, I'm gonna highlight the points of contact for you. So the upper resistance trend line over here has one touch. Why can't I pick the arrow? That is quite annoying. You have another touch over here, and the lower support. The lower resistance trend line has a touch over there. It has a touch over there, and well, almost a touch over here, but you get the point. And as you can see, we've hit our head multiple times on these levels, and you should keep an eye on these trend lines because once you hit them, that's a good indicator to take some profits, basically, right? Because you can see here, you were running into this resistance that you hit previously over here, and you could have potentially taken profits. Right? That was kind of your support indicator telling you, hey buddy, maybe you take some profits because we've hit this level with our head multiple times, we may come back down lower. Obviously, it's not guaranteed that you're going to come back lower and you're going to get rejected from that level. But speaking historically, you see that you've been rejected from that area multiple times. You could have taken at least some profits and bought back in cheaper right now. Now, jumping into the price action over here. So on the daily chart, you're landing back on the 20 EMA. The yellow line is the 20 EMA. The red line is the 55 EMA. So we're bouncing off the 20 EMA right now. If you start losing that as support, look for the 1.414 at $14.70 and look for the 55 EMA to land on. Right? I don't think, as you can see, if you start losing the 55 EMA, it's a fire sale, in my opinion. Just buy as much as you can, as many coins as you can. But as you can see, you perfectly ran into the 1.618 over here, and that was a great resistance level. So hopefully you paid attention to the videos. Hopefully you set up the fibs like I showed you. And, I'm not blowing my own trumpet. I'm not saying that I'm, a wizard or anything. It's just based on the fibs. And it really does work, doesn't it? Now, like I said, this white resistance trend line that we had before now is our support, and we have to back test it as support for confirmation. So potentially, if we have a strong Bitcoin pullback, we get some bearish news, you can potentially see maybe a wick to this area. So this is around $10.50. And that would be quite the pullback from the $20 mark, but that doesn't mean that it can't happen, right? You can potentially start going down. The EMAs are going to come back closer. You have a little wick. You come back up above the EMAs, I do apologize, and continue on with the uptrend, because the gap in between the daily EMAs is quite large. And once that happens, once the gap in between the EMAs becomes, this large, that tells you that potentially you're going to start losing the 20 as support. You're going to land on the 55 and consolidate over there in between the EMAs. While the 20 comes back down, you have that little EMA squeeze and you have the next leg up, right? Because they need to catch up, basically. The EMAs need to catch up. Once there's this huge gap, that's quite unhealthy, right? So I would look for some buy orders at the 55 EMA. Currently, that's around about $13.75. So, and they are moving. They're constantly moving because they follow the price action, obviously. So yeah, keep that in mind. And let's look at I just showed you the daily RSI. Now let's jump into the Binance chart so we can look at some oscillators. Okay, so this is the daily chart on the Binance over here. You can see that the stochastic was in the overbought here, so that was another great indicator for you to take some profits. Wait until you get below the index of 20. That would mean that you're oversold on the daily chart, and that's a great entry point over here. Once you're out of the purple box below it, that's a great entry point, so I would wait until we get back down there on the daily chart. Now, jumping into the MACD, you're having the bearish cross here, and as you can see previously, once we had this bearish cross, we had quite the move down. Let's compare that to the price action. You had a pullback of around about 20%. So if we have a pullback of around about 20%, that would put us at $13.50 roughly. So potentially we can come back down even lower based on, the previous bearish cross that we had on the MACD. Also, you can see that we are in this rising wedge on the daily chart, which is a bearish pattern. It's a trend reversal pattern. And it basically means that you have, once you start losing the support of the wedge, you have a target of, basically your target is over here, right at $6.10. And probably you're not going to get, down that low. But hey, I'm just letting you know that that's our target once you start losing the support of this wedge. Now, why is that your target? Because that's where the wedge was created, right? First off, you hit your head and create this resistance level, right, that you see above. So the resistance level is created, but you don't have your support. Now, once you start coming back down and you bounce off of support level and start coming back up, and you have the second bounce, right, and then you have the third bounce. So this is a valid support level, but the target is where the support was created initially. Hence, the wedge was created where the support was created, because there is no wedge without a support trend line. So yeah, all I'm saying is that that's our technical target. Do I think we're going to get there? Only if Bitcoin crabs the bed and we go into the, and we lose 39K, we lose, 35K once we start dropping massively and pretty fast, yeah, that can happen, right? You can potentially see a flash crash with a huge wick to $6.10 and a quick recovery back above $10. That's also something that can happen. But you do have this Fibonacci retracement over here. So basically the swing high over here is on December 27th and the swing low here on December 5th. That gives you the 1.272 at $21.50. We almost got to that 1.272 target. Your technical target was at the 1.618 here, $30.50. So that's still something that we're going to be targeting based on this fib. So what can happen, in my opinion, is if we start losing this support trend line of the rising wedge, we can potentially land on a fib level here. And we have a couple of fib levels set up. So you have the 786 at $13.34. You have the golden ratio at $11.30, and that's something that I'm eyeballing, because if you start losing the 786, you're probably going to come back down as low as the golden ratio at least, because we haven't had the retest. As you can see here, you broke through it, but you haven't had the retest. You started coming back up and going up even higher. Now you want to come back for the retest and continue on with the uptrend. So basically, even if we come back to the golden ratio, that's still a higher low, and you're still adhering to the uptrend. And that's it. That's going to be the pullback from this rising wedge, because coming back all the way down to $6, that's kind of crazy, right? You can potentially look at $7.72, but that's still quite low in my opinion. But you can never say never here in crypto. Like I said, that's your technical target. Do I think we're going to get there? Probably not if Bitcoin continues with this consolidation period, right? So the worst case scenario is a bounce off the 0.5 here at $10. That's a 50% pullback from the all-time high, but hey, that's a great buying opportunity in my opinion. Now, if I missed out anything on the charts, please let me know down below in the comment section. And please make sure to check out the Telegram chat. We have a great Discord community as well. You can request technical analysis in there and stay up to date with the latest crypto news. And make sure to check out our Patreon. That's a great source for people to get my buy alerts, my sell alerts. We recently had a great Polkadex trade. We bought in a couple of days back in, I think that was January 13th. We bought in, and it did a 50% move in 4 days, and we took some profits. So that was a great trade. We have low cap jump calls in there, you know, personal technical analysis and video requests, all that type of stuff. So it's a great investment in this channel, and I'm gonna make sure your investment pays out, guys. So feel free to check it out. Link is in the description. I'm gonna catch you in the next one. Goodbye and good night.